This week on Mornings with Joel, CRE podcast, we're joined by Cliff Booth, founder and chairman of Westmount Realty Capital. With more than 40 years of experience in commercial real estate, Cliff has built a nationally recognized investment platform and successfully navigated multiple market cycles. We'll discuss industrial real estate investing, capital markets, long-term investment strategy, and the lessons he's learned throughout his career.
If you're a commercial real estate investor, developer, broker, or industry professional, you won't want to miss this conversation.
This week on Mornings with Joel, CRE podcast, we're joined by Cliff Booth, founder and chairman of Westmount Realty Capital. With more than 40 years of experience in commercial real estate, Cliff has built a nationally recognized investment platform and successfully navigated multiple market cycles. We'll discuss industrial real estate investing, capital markets, long-term investment strategy, and the lessons he's learned throughout his career.
If you're a commercial real estate investor, developer, broker, or industry professional, you won't want to miss this conversation.
This week on Mornings with Joel, CRE podcast, we're joined by Cliff Booth, founder and chairman of Westmount Realty Capital. With more than 40 years of experience in commercial real estate, Cliff has built a nationally recognized investment platform and successfully navigated multiple market cycles. We'll discuss industrial real estate investing, capital markets, long-term investment strategy, and the lessons he's learned throughout his career.
If you're a commercial real estate investor, developer, broker, or industry professional, you won't want to miss this conversation.
This week on Mornings with Joel, CRE podcast, we're joined by Cliff Booth, founder and chairman of Westmount Realty Capital. With more than 40 years of experience in commercial real estate, Cliff has built a nationally recognized investment platform and successfully navigated multiple market cycles. We'll discuss industrial real estate investing, capital markets, long-term investment strategy, and the lessons he's learned throughout his career.
If you're a commercial real estate investor, developer, broker, or industry professional, you won't want to miss this conversation.
This week on Mornings with Joel, CRE podcast, we're joined by Cliff Booth, founder and chairman of Westmount Realty Capital. With more than 40 years of experience in commercial real estate, Cliff has built a nationally recognized investment platform and successfully navigated multiple market cycles. We'll discuss industrial real estate investing, capital markets, long-term investment strategy, and the lessons he's learned throughout his career.
If you're a commercial real estate investor, developer, broker, or industry professional, you won't want to miss this conversation.
This week on Mornings with Joel, CRE podcast, we're joined by Cliff Booth, founder and chairman of Westmount Realty Capital. With more than 40 years of experience in commercial real estate, Cliff has built a nationally recognized investment platform and successfully navigated multiple market cycles. We'll discuss industrial real estate investing, capital markets, long-term investment strategy, and the lessons he's learned throughout his career.
If you're a commercial real estate investor, developer, broker, or industry professional, you won't want to miss this conversation.
This week on Mornings with Joel, CRE podcast, we're joined by Cliff Booth, founder and chairman of Westmount Realty Capital. With more than 40 years of experience in commercial real estate, Cliff has built a nationally recognized investment platform and successfully navigated multiple market cycles. We'll discuss industrial real estate investing, capital markets, long-term investment strategy, and the lessons he's learned throughout his career.
If you're a commercial real estate investor, developer, broker, or industry professional, you won't want to miss this conversation.
This week on Mornings with Joel, CRE podcast, we're joined by Cliff Booth, founder and chairman of Westmount Realty Capital. With more than 40 years of experience in commercial real estate, Cliff has built a nationally recognized investment platform and successfully navigated multiple market cycles. We'll discuss industrial real estate investing, capital markets, long-term investment strategy, and the lessons he's learned throughout his career.
If you're a commercial real estate...
Okay. Hello, everybody. Thank you for being with us this week on the Mornings with Joel CRE podcast. As we always have done, we've always brought you very, very exciting guests, thought leaders in the industry, and we have not failed to disappoint in this particular case as well. Today we have Cliff Booth with Westmount Realty Capital, and I think you'll love to hear what he has to say. He's a senior in the business. He's been around 40 something years in this game. Matter of fact, Cliff, I don't think you've done nothing else. Came out the diapers, went to school, and went to work. So it's been a long run. So
Pretty much to thanks, Joel. Great to be with you today. I did have a
absolutely.
bit of a background.
Okay.
Just I was in a family antiques and art business
Oh,
before with my father and grandfather. I was third generation, originally from Montreal, Canada, and we relocated the business to Dallas and bought a building for our antiques and art gallery that brought me into the real estate business. My family had been small real estate investors on the side, so just a little bit of a segue there for you.
okay. No, that's great. That's great. That's something I didn't know. So I appreciate you sharing that. And I'm gonna circle back to that because, believe it or not, I've seen correlation between the art industry and the real estate industry, and I'm seeing a lot of crossover between the two. So I definitely want to dive back into that a little bit later. So I think that's interesting. But all right, so you grew up in Montreal, as you mentioned. You moved down to Dallas. I think that was around 79, 80, somewhere in that
Correct.
time frame. And how long was it before you decided to start your own firm and kind of get going from that standpoint? Or did you work for another real estate group before you kind of jumped into the entrepreneurial side of the table?
I was too stupid to do that. I should have. That's what I should have done on retrospect. But I guess I had this stubborn, independent streak in me, which meant when I say stubborn and stupid, because I paid for all the mistakes rather than joining a firm and learning best practices and how people who were experienced did it. And I say I paid. I guess people who invested with me also paid. Unfortunately, we didn't do anything too stupid, but yeah, it would have probably been smarter and smoother to get some education with a big firm. But that was about 4 years where I was in the antiques and art business in Dallas, and then we sold that building that I mentioned, and that sort of launched my real estate career. Started
Okay.
doing all kinds of small deals and just grew over time.
Yeah, yeah. So you probably saw those proceeds and was like, wow, I could do this for a living.
Well,
So,
yeah, it's true because being in the antique business in an environment, for those who can't quite place, 79 to 83 was Reagan,
mm-hmm,
Iran hostage crisis. We're back to Iran
mm-hmm.
and high interest rates. People talk about high interest rates now. It was 21 and three quarters.
Wow.
We were borrowing at three above prime, so we were 24
Oh man.
quarters. So, um, doing deals in that time period and the whole SNL crisis and all that stuff. Yeah, it was quite a different I've been through a few of these ups and downs. I still say that was the worst one of them.
Yeah, yeah. Well, that's interesting, and it goes kind of toward your uh, how should I say it? Your stick-to-itiveness, your stickiness, if you will, that you've been able to survive all these years because there's been a lot of market cycles since 1979, a lot of stuff that has
True.
happened. Yeah.
And every one of them are different, right? I think you have to be careful not to wear the glasses that you wore in the Great Financial Crisis or the SNL crisis because they all have a different kind of complexion to them, right? So here we are, in 2026. I wouldn't call it it's not a crash certainly, but with interest rates having gone up 5.5 basis points, a few years back already, it definitely put the brakes in a lot of aspects to the real estate business. I just got off a call a little while ago with one of our investors in Dubai. I mean, you can imagine what that conversation is like, right? They're
Yeah.
getting bombed. They never thought they were going to experience anything like that. So their their mindset about investing, they have large cash flow businesses that are, and the port, he said, is 20 to 30% active right now. Dubai's right on the straight there. I reference it all to say that even though we're not in a recession and the stock market is very high, We got a war going on. There's another war going on that, maybe we're not as, several other, we're not as active participants. It's capital markets wise, it's a very strange time. And I would say one of the more difficult capital market environments that we've ever navigated through. So, but property-wise, our industrial portfolio is performing great. Multifamily, not quite as great.
Yeah, yeah. Well, that's a good point, and that's kind of a whole nother segue to jump into. But you bring up some points because we don't have a lot of guests that have the years of experience that you have, right? And I think that you really make a point there because every cycle is a little bit different. You think about the dot-com issue that we had, and we think about 9/11, and we think about, all these different things, and they're all different from that perspective. So you kind of say to yourself, okay, well, how do I navigate this? Let me ask this. What have you found to be the success formula, if you will, in times when markets are unstable? Like for an example, we just went through an issue where retail got decimated, and everybody was saying that a lot of these businesses are getting Amazoned, right? But then if you buy at the right time, retail started coming back. Okay. You look at office, it kind of had the same thing with COVID, but then at a certain point in time, you want to be in the market. So how do you navigate that? What are your triggers, or how do you underwrite to that to try to figure out where to make your moves?
I'll tell you what has come through to me over the years is a couple of things. One is discipline. Keep your discipline. We spend a lot of time on AI like everybody else is. We spend a lot of time, prognosticating, thinking through, looking around the corner. But at the end of the day, in real estate, and I'd say probably a lot of other things, keep your feet on the ground. There's some things that don't change, right? The basics. How much you're paying for an asset, how much debt you're using, interest rate sensitivity, the location, the rent roll. I mean, I can go down the list, but it's the basic stuff that sometimes I think people get lost in with what I'll call desktop analysis. Kind of, step back and go, what makes sense? What doesn't make sense? So we're not super active right now. I wish we were more active. We've got a lot of people working hard, trying to find deals that make sense, but we're saying no most of the time, or we're getting outbid. Because we're not satisfied with, the price that we can get. So I think it's really a question of discipline and being grounded in the basics of the business. And the other one, I mentioned it, but is debt. Where people get in trouble, most of the time, I mean, things can happen. You can lose a tenant, or something strange can happen in a situation. But most of the time that I see where people get in trouble on real estate deals is on debt. Is that you use too much debt, or you did floating rate debt where you shouldn't have, or you didn't hedge properly, or your maturity doesn't match your rent roll, or any number of things. Now that doesn't mean that if you paid at top of the market and the market went down, that even if you have debt that works, you're still not in a good spot. But you're not going to lose your money. You can hang in there, and over time, because the thing is with real estate is probably if you bought a decent asset, maybe it won't work within the time frame that you bought it, but you won't have equity wipeout. And over some time, we've had some deals where it was a very sad story at a point in time, and then by being able to hang in there, we did well over time. It might have taken a long time even, but we still didn't experience an equity loss that way. In fact, the multiple and the amount that we made by holding on for a long time actually turned out to be interesting. But when you get in trouble on your debt, and you throw in the towel, or you're forced to throw in the towel, that's a tough one.
Yeah, yeah. Well, that's actually a really big issue because You think back to the, '09, '08, '09 crisis, the GFC, as many people referred to. The question was, when do you unload those assets and run, or do you just sit tight and continue to work through them? And a lot of people got scared. A lot of pension funds and other things got scared and just decided to liquidate. And, it wound up being the bad decision when you look back in hindsight.
It depends on your business model. If you're in a fund and you have to liquidate after a certain period, then you may be forced to do that.
That's true.
Or if
Yep.
you get pressure from your board, or you're public in your, or a pension fund that has to mark to market every quarter, every year.
Yep.
We don't typically have to do that. We're a private company. And we don't have a fund model. So there's pluses and minuses to everything. I'd say that's one of the pluses, that we can decide to hold. We can decide to hold certain assets forever and not sell them if we think that's the smart thing to do.
Yeah, absolutely, absolutely. Let's do this. Let's take this quick 20-second break. We're a little bit behind, but Jomar, we'll take that, and we'll be right back here on the Mornings with Joel CRE podcast with Cliff Booth. Please stay tight.
Step into the future with EcoCrypt, a platform unifying decentralized finance with real-world utility, where value flows freely. From gaming achievements to real-world assets, everything can be tokenized, fractional, and accessible in one trusted ecosystem. For gamers, investors, and global communities, EcoCrypt is breaking down barriers and democratizing finance. Join the revolution. Visit ecocryptusa.com today. Step into the future with EcoCrypt.
Thank you for staying with us here on the Mornings with Joel CRE podcast. We're mid-conversation with Cliff Booth of Westmount Realty Capital. Let's jump back in. So, Cliff, you brought up some very good points. Like you said, you might be forced to sell in a certain situation, especially if you're a public firm. You don't have a lot of options there, or maybe you're a pension fund or something like that. But I like the point that you mentioned about sticking to the fundamentals. That actually really is right in line with stocks as well. You might see a company like Apple, just to kind of pick on them, and the stock goes down, and you're like, okay, look at their cash on cash balance sheet, and look at this and look at that. Is the company going anywhere? No, it's not going anywhere. So why would I run scared and sell that stock, even though it might take a little dip? Might be a time to buy, right? So the same thing here with those fundamentals, sticking with that. And have you done that over the years, basically, where you see a market soften and you've jumped in? Or do you wait until, at what point do you generally decide to jump into a market? Or is it just sticking with the fundamentals and you're just solely running the numbers?
No, we definitely have done that many times. But I'd say we've done that in geographic markets.
Okay.
But also in sectors. Right?
Okay.
Where we've decided to enter a sector that we thought was more opportunistic, or the wind at its back. Or, for example, we're investing and developing cold storage warehouses. So we think it's recession proof. They're hard to build. They're more expensive and more complicated than typical warehouses. We've done a fair amount in that space over the years, so I give that as an example. Or certain geographic markets that we've gone to here or there that maybe were not as in favor at a given time, but we believe that there was a good story there and have done that.
Yeah, that's a good point. So let me ask that, because you mentioned about cold storage. Your entry into the cold storage arena was back in the 90s. Nobody was really talking about cold storage, at least from what I understand. Nobody was really talking about cold storage back then. What made you decide to say, you know what, I think there's an opportunity here that people are missing, and to go that route? What was kind of that trigger for you?
The first deal was even earlier than that. We did first small one in the 80s, and it was kind of by accident, like the way life goes.
Okay.
We had a small warehouse in Dallas where a tenant moved out, and a cold storage tenant came in. I didn't know anything about it. I was kind of intrigued, but that was my first experience. It was a guy. I'll just take a second here. It was fascinating. he all he had in his business was a bunch of shredding machines, and in the dock doors came lettuce, cabbage, carrots, celery, maybe onions, and all these vegetables came in, went into the shredders, and at the other side of the shredders, the backside was these large garbage bags, like huge garbage bags, plastic bags, not garbage, that would fill up with all these shredded vegetables that would go to hospital cafeterias, corporate cafeterias, hotels, etc. And that was the guy's whole business.
Wow.
It's like, what? In the 80s, it's kind of the light bulb went on for me. And now, as you probably know, I mean, there's so many iterations of what people do in cold storage, food prep and ripening rooms for bananas and avocados and freezing of proteins. And I mean, it's pretty fascinating stuff. So yeah, we like it a lot.
Good. Appreciate that. Let me ask this. You've mentioned that you're not a fund model. Why did you decide not to do a fund? If you think back to when you first got into this business, I was on Wall Street in the 80s, so I understand it. Everybody was talking fund model, fund, raise a fund, raise a fund, raise a fund. Why didn't you do that? Or did you do that and fail and decided I can, instead of sitting on my hands, I can get busy raising per asset? I mean, what happened there?
It's a good question. We modestly tried a couple of times, and it was always this thing. Well, you gotta devote a year or two of your life to do it. Number one. Number two, everybody was always telling me, well, you don't make money on the first fund, so that never sounded attractive. Number three, you're crossing up all the assets. So friends that I had in the fund business, like one that I talked to recently who joined a company unnamed in 2012, and he just left there in 2026, and he made his salary, but he never made a nickel of promotes from 2012 to 2026. Wow. And not because he himself claims, and I believe him, that he brought a lot of good deals to that fund, but other considerations, that other assets that were in that fund, and it's probably not a typical story because 2012 to 2020 was probably a pretty good buying environment. But anyway, when you cross them up, it doesn't take a lot of deals to go bad to wipe out those promotes. So there was all kinds of, and frankly, I guess the two primary reasons were we were able to get deals done without that, and the compliance issues. I would always hear from friends and associates that if you have a fund, then you're not just in the real estate business, you're in the compliance business. And I would see from groups that we would present deals to, I would send them a deal and they'd say, we like this deal, we like you guys, but we're not going to do the deal because of blank. Too early in the fund, too late in the fund, too much concentration in this market, too big, too small, too green, too pink, whatever the story was. And so we said, we don't have those restrictions. If we like a deal and it happens to be in a market that we're already in, great. If it happens to be in a new market, that's fine too. What I've found now over the years is we actually have quite a few employees who have left or migrated from fund models to our company because they said they don't want to do that anymore. So I am definitely not dumping on funds. There have been some days where I've said, maybe I should have done that, and there's other days, more than not, that I'm happy that I haven't. So there's more than one way to be successful. We've just chosen another route.
Yeah, well, good answer. That's sheds a lot of light, and you're right. The compliance could be very, very heavy to deal with. So that makes a lot of sense. What was that?
And distracting.
And distracting. Yeah. Well, yeah. I mean, you basically have to set up a team just to manage that, alone. So yeah, it can become a big issue from that standpoint. Well, that's very interesting. Let me ask you something else. Because you've been around for a while, uh, what do you think is one of the biggest mistakes you've avoided over the years that could have, sunk the company or, really created some bad times for you? Or was there a situation like that, and you just kind of came back on, back out of it on the back end? You mentioned there was a couple of situations where you just had to sit in a deal and kind of ride it out. Um, so what situations like that do you feel you may have avoided a major catastrophe? Anything come to mind?
Well, what I would avoid now, I definitely made some mistakes along the way. I would say it's the Warren Buffett thing about invest in what you know and what you understand. So some people who know me and know us know this story. We bought the Bronco Bowl in Dallas. It was a large entertainment center. We bought it out of bankruptcy. We paid very little money for it, but it turned into just an absolute operational nightmare. Because we looked at it, and I didn't really give you a picture. It was a bowling alley with arcades and laser tag and nightclubs and a large 3,300 seat theater and sports bar and banquet room. I mean, it was this large complex. When we bought it, we used to own and operate a bunch of shopping centers. We had tenants for the various aspects of that business. So we looked at it as kind of a shopping center, a retail center.
Yeah.
The problem was that all of those tenants defaulted, and we ended up having to step in and operate that beast. And a beast it was. So, anyway, so it was, for me, it was, the lesson was, don't invest in something that's not your expertise and what you don't know and understand. And we got fortunate at the end. We actually ended up demolishing it and turning it into a real estate deal because it was a great piece of property, and we redeveloped it. And if you drove by there today, it's a Home Depot with some pad sites at Walgreens and a Chase Bank that looks like any sort of suburban development around the country. But I would say that maybe a little bit of smart because our basis was very low, but actually, a lot of luck.
Yeah, well, that's a good example. And it also teaches how do you pivot out of situations, as opposed to letting something suck you dry, analyze it and say, okay, well, what's the highest and best use? And in this case, it was total redevelopment and get the value from the land.
After 8 years of sucking us dry.
Got it. Well, you finally woke up and learned the lesson, huh?
Well, it came to us. We weren't even, it wasn't even, it was just, again, when you can hang in there, it gives you options.
Yeah, absolutely. Let me ask you this, and I don't know if you have any investments in this space, so I'm kind of asking without knowledge, but do you tend to, let me ask it this way. What's your perspective of investments in operating businesses as opposed to just businesses where you're not operating? So like for an example, industrial is not operational, right? A hotel is operational. So have you invested in any type of hotels or things like that other than that bowl thing that you were talking about? What's your thoughts on that today as it relates to maybe like a hotel that's a lot more simplistic than a hybrid like that?
Yeah, we haven't and we won't.
Okay.
So we have looked at, there's a couple of times we can close on some hotel deals, but again, people have made a lot of money, and I have a lot of respect for, huge amount of respect, especially having been through that operating business for any hotel or restaurant that lasts for a long period of time. But back to even on that cold storage, right? So we lease to operators, but we are landlords and we don't manage what's within the four walls in those cold storage businesses. So no, we are not interested. That's just not our thing. But those are legitimate businesses. Just back to maybe what I said: invest in what you understand and what you're doing. We have enough to do without having to get involved in the operations of that kind.
Yeah. Well, makes a good point, and that's why I was asking, because I didn't know whether you felt after doing that one deal it was like we'll never do that again and have stayed away from hotels and everything else. But
That's right.
Yeah, it's just stick with what you know.
That was the takeaway. Yeah.
Yeah, gotcha. Is there anything that, because I know you sit on the investment committee there, obviously, anything a deal that you wish you would have done that you decided not to,
There's
looking back in hindsight?
Sure. All kinds of deals. I mean, we used to buy a lot of land in Dallas. Probably should have bought this one. Probably should have bought that one. Couple of properties. I go, why'd we sell that? Yeah, we made money, but over time that would have been great asset to still hold. But I don't think about it too much. It's more. You think about it occurs to you here or there, but it's more you got to be grateful for what you've done. I don't know if it's directly related, but you asked me something. I'm actually calling you from the Bay Area, from San Francisco area right now, and maybe a little bit countercyclical, but not that much as it was 3 years ago. We're actually buying San Francisco office right now, so we don't love office buildings. Just generally, but we like to think that we're opportunistic, and I think San Francisco's got a pretty great story now in terms of absorption and rent growth and all that. So that's an area that we're spending some time on.
Yeah, that's quite interesting because to me that's the classic model where you see the city's not going anywhere, right? It's got its issues for sure, homelessness and crime downtown, things like that. It definitely has its issues. But at the same time, the city is not going anywhere. And it's one of the key cities in the United States of America. And it's a beloved city because of the architecture and the topography and whatnot out there. So you see office go down and you kind of think, well, should I run for the hills like everybody else? But like you're saying, you're taking a contrarian mindset and believe that it will come back. How many more years do you think it will be before it's back to where it should be? Any idea, or you're just going to make sure your basis is low enough?
Yeah, I mean, you're buying at prices that were 20 years ago. Leasing absorption is more than 2019. Rent growth is going like this on a monthly basis. We have a new mayor the last 18 months. There's a visible difference when you walk through. I agree with you. It's not over yet, but we've made great strides. I think the market it's clearly turned, right, in terms of the trajectory of where it is as a real estate market. When it will be back to what it was, it's hard to say. I think the exit is more questionable than the ability to rent. If you have a building today where you have money available to invest in tenant improvements and leasing commissions, you'll lease. Usually when you buy a real estate deal, your question is, can I lease it? Today in San Francisco, you don't have that. There's so much demand because of AI. And whatever anybody says about AI is everywhere, but this is still the center, right? You still got Stanford, Berkeley, the venture capital, the infrastructure, and you've even heard a number of stories about people that moved to Texas or Florida or somewhere else, but then they got a big job with a big signing bonus to come back here and work for somebody. So it's been interesting. To your point, don't bet against New York. Don't bet against San Francisco. These are cities that are not going away. So, but you got to be careful. Cities that are boom and bust are difficult, and you have to be a market timer. I don't really love being a market timer. That's the part that makes me uncomfortable.
Sure.
That's, but we will probably swim in that pond.
Yeah, gotcha. All right, well, we're up against our second commercial break. We're going to take that right quick for 20 seconds. We'll be right back here on the Mornings with Joel CRE podcast. Stay tuned.
The Impact Air 99. We asked real people, try the Impact Air 99.
Breathable, light, but protective.
Feels very comfortable wearing it. It looks cooler.
It's almost surprising how much air you can get in.
Engineered with 6 layers of nanoscreen technology that blocks over 99% of viruses and bacteria while allowing you to breathe freely and speak clearly.
My glasses are not fogging up.
I could wear this all day.
All right. Hello. Thank you for staying with us here on the Mornings with Joel CRE podcast. Again, we're sitting here with Cliff Booth, Westmount Realty Capital. And Cliff, we were just talking about San Francisco before we went to the break. I did want to ask you about a different asset class out in San Francisco, and I can't think of the name, but there was a major department store retailer that shut down. I think it's on Market Street, right downtown there, a few years back. What was the name of that store again, and what's going on with retail in San Francisco right now?
You're talking about the Westfield Mall.
Yes, yes, yes. That's it.
Bloomingdale's was in there. Nordstrom was in there.
That's
Unfortunately,
right.
more than one. Yeah, it's just it's a terrible story. I don't know if you've ever been in that mall.
I have.
The money that I mean, you talk about a beautiful mall.
Yeah.
You know, was used to go there, and it was teeming with people and vitality, local people, tourists, and everything. Completely shut down. It just came out in the last couple of weeks that it got foreclosed, and two local groups put it under contract at a significantly lower price, and it looked like that that was going to go back into private hands. They walked from the deal.
Really?
Yeah. So I don't know what's going on with it now. It's probably even going to drop at a lower price, because I mean it needs to be reimagined. There's various thoughts about what to do with it. It's it's an incredible piece of real estate, but Market Street is still struggling, and you'd have to have a lot of vision and a lot of money and a lot of time, a long time horizon to figure out a deal like that. So earlier in my career, maybe I would have. I mean, I'm not even thinking about a deal like that, but we were more risk takers to take on stuff like that. I would never think about something like that. Least, of the company or my life, but I applaud and I hope somebody does.
Yeah, well, somebody will. The question is, and I'm kind of intrigued by what you just said, that they walked from the deal. I mean, if your basis is low enough, you could figure the rest of it out. So I wonder if there's structural issues or just like you said, maybe just have to be totally reimagined and the price of doing it is just too high.
I think it was more that. I don't think it was. They didn't say why they walked, and maybe it will come out. But
Yeah.
You got to have a lot of cushion in a deal like that.
Yeah, absolutely, absolutely. Is what happened there with the mall indicative of retail in San Francisco right now, or what do you think?
To some extent, yeah. I think when you had the poor leadership that led to the terrible homeless situation, compounded with COVID, where in San Francisco, where they were much more accepting of work from home. Yeah, I think it killed retail. And then, I mean, I travel. We have investors from different places in the world. I got really tired of hearing what's going on with San Francisco. And you said it earlier that everybody loves San Francisco.
Yeah.
But we got beat up so hard, and rightly so, unfortunately, because the homeless situation is something that could be solved. It's a leadership problem, and I don't want to get distracted with that.
Right.
So, yeah, it was definitely, I think, a result of all that. That it just, we couldn't support convention business. I mean, why would you book, during all these years, why would you book a conference in San Francisco? I'm understanding that we're starting to get that back as the confidence is returning. But yeah, it was really bad for too many years, unfortunately.
Yeah, and that compounded with prices and affordability and housing and things like that. A lot of folks just started running to the hills in other areas. One of my closest friends actually left and moved up to Hercules, and now they're even further out. So,
Absolutely.
yes.
People, and now the rent growth in apartments. I mean, the hot thing now is to buy apartment deals because the rent growth is going crazy here in the city.
Yeah. Incredible. That might happen to the mall there. Who knows? Because like you said, it's a great corner. So
True. I mean, I can't imagine what it would cost to convert that thing to multifamily and getting windows. I mean, it was self-contained,
Right.
inward looking. So to get light and windows and all that'd be a big challenge.
Yeah. Well, I wasn't talking about actually a conversion. I was thinking about from a tear down perspective.
Oh, well, there you
Yeah.
go. Yeah, boy.
But yeah,
I know.
but
You're
that
going to have to do something. Somebody mentioned even a soccer field. I think that's why she didn't get reelected. Yeah.
a soccer field. Yeah, that's too much World Cup hysteria. Oh man, yeah, but no, that would be something. But the building is almost kind of historic, so I doubt it'd be torn down. I don't know. It's an interesting piece of real estate for sure, as you mentioned. So it's kind of interesting. Let me pivot to something else real quick as we kind of get close to the end of our conversation here. What advice would you have for people getting in, younger folks getting into the industry now? You asked about, who's our audience, and our audience, believe it or not, is a lot of younger folks that are maybe, you know, 20s, early 30s, and they're kind of really getting going into space. They're transitioning maybe from other careers and they're looking at doing more in this space. What advice do you have for those folks so they don't make some of the same errors that may have taken you 10 to 15 years to figure out?
Sure. So first thing is to figure out what part of the business you're interested in and what aligns with your skill set, what lights you up. So
That's a good point.
Yeah, I mean, there's a lot of pieces of the business, right?
Mm-hmm.
Everything from appraisals, property management, leasing. Finance, brokerage, and even within brokerage, tenant rep versus project rep, retail, multifamily, office, self-storage. I mean, it can go on and on. Being a developer versus being on the investment side, public versus private, debt versus equity. I mean, there's lots
It goes on and on. Yep.
Right. So I think understanding and maybe even trying a couple of things, because I have conversations with young people, and even saying all those words that I just said, they might not even understand what those mean. And so I think it's important to figure out what you like and what you don't like, and again, aligning with what your skill set. I've seen people be successful at all of those, whether it's brokerage or, on the developer investor side. I've seen guys that have come at it from the leasing side, so they understand what it takes to get a deal done, how to negotiate, how to find tenants, how to motivate brokers. I've seen guys come in from the capital side who are great with numbers, who are well connected with equity or understand debt. There's no one way to do it. I've seen guys who have been super successful being brokers compared to principals on the investing and development side. So I would say really, figure out, and to the point when you asked me about, how I did it, go look for some companies who know what they're doing. You're going to learn a lot just learning how the big boys have done it. What are best practices? Get that exposure to, to markets and to sitting in an investment committee or pipeline calls and see what are the questions that people ask. So be a sponge, read, attend conferences. I'm a big proponent of ULI, the Urban Land Institute. It's there's local chapters, there's the national chapters, there's international chapters, but there's many other great organizations. Network, and then get a good education in terms of adding on to your experience, whatever your degree is, and take some real estate courses through some of these great local organizations. But be a sponge and learn and ask people out for lunch and attend their events and then figure out what you want to do and go from there.
Yeah, that's a good answer. Really get immersed in it so you can identify where that love is, if you will. Because as well as I do, this business can be a slug sometime where you're just kind of trudging through the details trying to get stuff done.
Like
and if you don't have a passion for it, you'll just walk away. So
podcasts, newsletters, getting online, and there's so many. Stuff that comes into my my feed in my email that I read every day about the, primary markets or capital markets, or what are some of my competitors doing. You keep up. You really need to keep up. If you're not, I have friends who are sort of starting to wind down. If they're not keeping up, they're already behind.
Yeah.
Market's moving so quickly. What was true a year ago may not be true now.
Yeah, very true. Very true. Very, very true. Let me ask you two other things real quick. I'd like to get your viewpoint on it. I don't want you to talk about specific markets because that's unfair to you, right? But what I do want to ask is where do you see opportunities in the marketplace right now? And again, you don't have to tell us specific markets, but where, like what asset class or what do you think is opportunistic right now?
So most of what we do is industrial multifamily.
Okay.
I mentioned a little bit of office, but most of what we do is industrial multifamily on the acquisition side. What we are spending time on right now is development.
Okay.
More time. So we're still our daily business is, operating our portfolio and then trying to buy industrial and multifamily across the country. But we are increasing our staffing and our activities on the development side. Right now, probably more on industrial, but also a little bit on multifamily too. And I mentioned cold storage, but not just cold storage. So dry, what I call dry industrial, regular industrial, and cold storage as well. So, that's in multiple markets. More, I'd say, across southern half of the country, giving you a bit more than you asked for there on geography.
Yeah.
But so, look, a lot of markets got overbuilt. I think there's fewer market participants who are willing to develop right now because they're still feeling some pain of development deals that didn't go as well. We don't have any of those. I think that there's not kind of across the board, go build anywhere. It's a very targeted rifle approach to development, but that's where we see some opportunities right now.
Yeah, yeah. Well, I actually agree with you on that. Development is tricky in certain markets. We had to pivot from development to acquisitions for that very reason. But where it works, it works basically. So you got
it's risky if you're building speculatively. That's why you really need to do your homework and buy the right piece of land and have the right team in place to execute and then fingers crossed.
Yeah, yeah. Some industrial markets are certainly overbuilt when it relates to industrial, and you're seeing that in absorption rates. But interesting point. And then lastly, just wanted to get your take on this. You mentioned that you had investors all over the world and whatnot. What have you found to be the key to success as it relates to raising capital? That's always an issue that people try to work through. So what would you say are the keys to success in that regard?
Relationships.
Okay.
You gotta prioritize those relationships. I would say people investing, especially from outside of the country, they make one decision. When they decide to invest and press that keystroke to send that wire, yeah, they're underwriting the deal, but they're underwriting you.
Yep.
You, your firm, your track record, your thesis, your strategy. So we spend a lot of time on relationships everywhere. Relationship with our employees, with our investors, with our brokers, with our lenders, with our vendors, with our tenants, everybody. But on the investor side, it's really important that you do everything possible to keep them informed. If you hit a bump in the road, make sure people know about that quickly. Full transparency, just keeping everybody abreast. Things have been a little rougher the last few years. Make sure that you get all that information out. So raising capital is it's like a chef, right? There's definitely some science to it. I'd say there's more art than science. And I think have investors from 12 or 13 different countries, literally from all over the world. and that's kind of grown over time. Clearly a lot from this country and from Canada, where I'm originally from, but Europe, Asia, Gulf, South America, Central America, all over the place. And so and everyone's got their kind of little tweaks and preferences. The main common denominator is that U.S. is still U.S. and people want to be in U.S. And so I think we need to always make sure. And it's a big country. The story in Atlanta is different than the story in San Francisco or in Chicago. So we need to put their see it from their point of view. Don't take for granted that the things that we know about every day that they know. They're reading newspapers that don't get into the detail that we all see every day. They're seeing kind of major headlines, not granular. So it's sensitivity to sitting in somebody else's seat who's far away.
Yeah. Well, good point. And I think at the end of the day, you're spot on. And if you focus on relationships and not just give me the money, you'll go a lot further.
That approach I find doesn't work very well. Spend time on the relationship. A lot of those groups in Japan and different places, it's all about the relationship.
Yeah, big time, especially in Asia.
Nothing's going forward until that relationship gets cemented, solidified up and down the organization.
Yeah, very good point. Very good point. So, all right. Well, hey, it's been a great discussion. Anything you want to leave us with today, Cliff? I enjoyed talking with you.
There's always opportunity. I'm optimistic. I got off this call I said earlier about, there was people concerned about the war and, various things. America's still America. We whatever your politics are, you like what's going on, you don't like what's going on, you got to see past that. We're still, who we are. I think it's a time to be careful, but there's always opportunity. And like I said, keep your discipline. So we're cautiously optimistic, and very fortunate to be living in the country that we live in.
Yeah. Well, it's still the largest economy in the world, so a lot of opportunity here because of that, without a doubt.
Years.
Yeah. How about that? So, all right. Well, we appreciate it. Well, guys, thank you so much for being with us today. We enjoyed the conversation with Cliff. I hope you have as well. And we look forward to seeing you next week as well on the Mornings with Joel CRE podcast. Thank you so much and have a great day.
Are you ready to level up in commercial real estate? Join us on Mornings with Joel CRE podcast, where we bring you exclusive interviews with top deal makers, investors, and industry leaders. Sponsors reach a high-value audience of real estate professionals. Guests share your expertise and grow your influence. Don't miss out. Book your spot today